today's video, we're going to be focusing on the 5 Bitcoin halving phases with particular emphasis on these last 3 ones because we're getting very close to the halving, and we're going to be talking about how these 5 phases can help you in this year of 2024 navigate the Bitcoin market better. Let's dive right into the video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's talk about these 5 Bitcoin halving phases. First of all, we're really seeing a shrinking in this first pre-halving period. This pre-halving period is essentially giving us some insight that we're running out of time for a potential deeper retrace in this now 35-day period. Historically, we've seen some retracement within this pre-halving period. In 2016, it was an 18% retrace within a reaccumulation range, so still retracement within a bullish framework. Here we saw the pandemic really influence this 63% crash. So if we were to see a retrace over these next 35 pivotal days, it probably wouldn't be a 63% crash. However, 18%, 20%, 25%, that would be something reasonable to expect. Moving on to the pre-halving rally, however, this is where we see strong upside occur 2 months before the halving event itself. So in 2019, 2020, for instance, we saw a V-shaped reversal and an uninterrupted uptrend going into the halving event itself. It formed a lower high relative to this high, for instance, but if we focus on 2016, for instance, when we broke out from the reaccumulation range here, we rallied to new highs before retracing around the pre-halving retrace point. So here, if we were to get this retrace over these next 35 days or so, that would really be healthy for enabling the next pre-halving rally going into the halving event, which this pre-halving rally occurs 60 days before the halving. So really important to keep that in mind, because with mid-April being the halving event, in mid-February is when we should start to see things really pick up if history is to repeat. And going all the way up to mid-February, that's going to be that last bargain buying opportunity potentially for Bitcoin to pull back before that pre-halving rally occurs. Let's focus on phase 3, however. And that's the pre-halving retrace. The pre-halving retrace tends to occur around the halving event itself. We've seen a 20% retrace in the March 2020 or at least May 2020 period. So this pre-halving retrace tends to occur after that pre-halving rally. We pull back for a retrace, and in this cycle we consolidated at highs for multiple weeks. In 2016 we had a pre-halving rally and then we pulled back 40%, but then consolidated for multiple weeks. So the pre-halving retrace, anything from 40%, which is unlikely in this cycle, to 20% like we saw in 2020. So anything is reasonable within the 20% region. Maybe even 30% if we're lucky. Doesn't have to happen, but a pre-halving retrace tends to occur a few weeks before the halving. Here, it occurred 3 weeks before the halving, I believe, and in 2016, we saw it occur some 3 to 4 weeks before the halving. So really important to mention that the pre-halving retrace occurs a few weeks before the halving, and this is where people buy the hype and sell the news, trying to profit on this halving hype, but forget that the halving hype is something that impacts price in the long run rather than in the short run. So let's focus on the post-halving resistance. This is the reaccumulation period. And this reaccumulation period sees price move sideways for a very long time, for multiple weeks at a time. Here we saw a few months of sideways price action. And then when we broke out, we still saw a bit of sideways price action. Still lots of volatility, chopping up traders and investors alike, shaking people out who are very impatient in buying before the halving and holding for post-halving exponential price action, but getting a bit disappointed with the fact that we're not seeing much price appreciation during this post-halving period, but it takes things a while to get going. And this is one of the last reaccumulation points to jump on the Bitcoin train before it transitions into the post-halving parabolic phase. In 2016, this was the case as well. We had another reaccumulation range form. And generally, this entire cycle, you can see accumulation range form at lows, breakout, reaccumulation at highs develop, breakout, and then post-halving reaccumulation before breaking out once again. So that cycle was a tale of 3 accumulation and reaccumulation ranges. So post-halving, we tend to see sideways price action shaking people out, capitulating them, especially on volatile wicks like this one here. And many people are shaken out and capitulating during this time because they don't see the returns that they were hoping for in the post-halving period. Because look here, in the pre-halving rally, we saw strong upside, and we tend to see strong upside in the pre-halving rally. So short-term traders and investors want to buy Bitcoin expecting the same in the post-halving period, but that just doesn't turn out to be the case. We tend to see sideways, boring price action, and the patient are the ones who ultimately succeed in what is the final post-halving parabolic price action and period and phase in the 5 phases of the Bitcoin halving. This is where we see, after several months of reaccumulation at similar highs, we then transition into a period where we finally take off and rally to new all-time highs and beyond and enjoy parabolic price action in the uptrend. And this is where we see the halving really impact price action. And so the same will occur in the future once we have that reaccumulation period. And that happened also in 2016. We broke out from this reaccumulation range, retested the top of it, and then we didn't look back and saw parabolic price action rally towards the upside. And here as well, once we were able to break out from this reaccumulation period, price simply never looked back. So in sum, really important to just understand that within the next 30 days, there is scope for a pullback. It would be healthy, and in fact, it would enable a pre-halving retrace, which occurs 2 months before the halving event. So going into mid-February, a pullback is possible, but if we don't get that pullback, which would be the final bargain buying retracement opportunity for Bitcoin to buy it at a discount, if we don't get that, we might just see a very bullish period and see pre-halving rallying in any case. But generally speaking, a pullback within this 30-day period all the way up to mid-February is that period. That would enable the pre-halving rally, which tends to occur 2 months before the halving itself. And this is where we see a lot of upside in Bitcoin's price action going into the halving event. But just a few weeks before the halving, we tend to see Bitcoin top out for the moment to enter a pre-halving retrace of 20% to 40%, with, of course, this cycle being a little bit different, where we might not see a very deep retrace of up to 40%. 20% could be something reasonably legitimate, something to expect. And then after that, pre-halving retrace, post-halving accumulation, or at least reaccumulation, and this could occur for multiple weeks and even multiple months. So really important not to get shaken out and treat this as one of the most important reaccumulation opportunities after the halving, because that's going to be one of the last opportunities where price isn't going to be rallying too quickly or in a volatile way. It's one of those last opportunities for a bit of a calm Bitcoin before things really speed up in the last phase of the cycle, which is the post-halving parabolic rally to new all-time highs and price discovery, where things really do get crazy. They really pick up steam and people really see their portfolios build to unimaginable levels that might surprise many investors because they simply didn't anticipate that their portfolios would grow to such an extent. This is the parabolic phase of the cycle where, as a result, greed is very high. Loads of people are experiencing peak euphoria and FOMO and experiencing the best part of the cycle where gains really come quite thick and thin. They come very quickly. Really important to understand that this phase is a big portion of the cycle. We do see price rally to new all-time highs and enjoy an uninterrupted uptrend. Any buy the dip opportunity is a fantastic time to reload, but all the way to new all-time highs, we tend to see this parabolic phase of the cycle rally and occur over a period of several months as well. So really important to understand that this phase, while exponential and parabolic, it won't last forever. Really important to understand that that phase will also end buy the dips, definitely. Those are the best opportunities, and those are the only opportunities that we'd get in that part of the cycle. But also important to start dollar cost averaging out of the market. Once we get to really overextended levels, we'll be talking about that on this YouTube channel. So subscribe to the channel for more videos and to be informed when we get closer towards the bull market top. Subscribe to the channel and like this video if you enjoyed this one. That's about it for today. Thank you so much for watching. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.